All right, guys and gals, back in the action once again. Time to get back to work, close out the email, turn off all the distractions. Time to get ready for tomorrow's trading session. It's Wednesday evening after all. It is March the 4th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best levels of support and resistance, the best entry setups and exit targets, and most importantly, my job tonight is extremely important to identify the traps and avoid all those traps setting up for tomorrow. That's Thursday's trading session. And I got a jam-packed video in store for you guys and gals tonight. As you can see in the background, the charts are all prepped up. We got some oil, some S&P, and some gold on the video tonight. And of course, tomorrow's calendar, I got that ready to go for tomorrow. Got some big news tomorrow morning. I want to make sure you're aware of that news to avoid trading, and we'll hopefully get some setups in the wake of that news tomorrow. So charts are ready. Calendar is ready. It's great to have you with me. I'm ready to rock and roll. Before we jump into the video tonight, though, don't forget to subscribe to our YouTube channel. I don't want you to miss all the great videos we publish every evening on this channel. And don't forget, if you have any questions, drop those questions in the comment section below. And as always, hit that thumbs up button for me tonight if you tune in every evening and watch this video newsletter. But enough of that. Let's get this party rolling here. Starting off tonight's video with the economic news calendar for tomorrow, courtesy of Econo Day. Let's take a look at what's happening here on the schedule for tomorrow. Tomorrow is Thursday, March the 5th. And of course, as I mentioned at the beginning of the week, all eyes now shift to Friday's non-farm payroll report. Remember, this is the first week of the month, right? First Friday of the month, we got that monthly non-farm payroll number. So tomorrow, knowing that Friday is right around the corner, what you want to remember is it's going to be the first half of tomorrow's trading session is really going to be where I'll be focused on finding my best setups tomorrow morning, right? That means from 8 o'clock in the morning to 11:30 Eastern time. Now, I'm not going to say you can't trade tomorrow afternoon, right? But I'll be honest, usually that afternoon session before that employment number comes out is usually not that liquid. And that means the setups are not going to be as reliable. So my plan for tomorrow is make sure you hit that alarm clock early tomorrow morning. Get up early, get to those desks, right? Get those setups early, right? Make that money before lunch. That way you don't have to worry about, right, trading around that sloppy, messy stuff as traders, right, take protection ahead of Friday's numbers. That's the big theme for tomorrow, right? Tomorrow is kind of more accurately known as the day before non-farm Friday. So it's kind of like a half day tomorrow, right? Early in, early out, first half of the trading session. What else do we have going on here for tomorrow? Well, we also have that OPEC meeting, right? This has been a very highly anticipated OPEC meeting starting tomorrow. At some point tomorrow or Friday, we should hear the final word from OPEC. Remember, everybody's been wondering if we're going to get this production cut. Now, right now, most of the OPEC nations, they want to cut production by 1 million barrels per day right now. But I heard rumors today the Russians actually walked out of the negotiations. It sounds like everybody's on board for the production cut except the Russians right now. Will they get convinced? I don't know. We'll see. That is definitely something we are waiting on. You know, we heard some news today. If you notice, right, we got that little flash crash right before the inventory report came out today on the oil markets, and that was the rumor mill starting to fly. So we've been talking about this all week. One of the big kind of known unknowns is we are waiting for that headline to hit the news wires that they are going to do the production cut. I would imagine they're going to have no choice but to cut production. The problem is, as you can imagine, this coronavirus is slowing down the economy, and obviously drilling less oil, pumping less oil for these nations that rely on oil. That's a tough sell, right? That's a real tough sell. So that's something we're watching closely here right now. We saw that unexpected kind of rate cut on Tuesday, as you recall, right? Could we get another one of those breaking news tomorrow morning, 9:45, 10 o'clock, 10:15? Well, just like you, I'm going to be listening in to see if we get that production cut announcement tomorrow as well. Obviously, that's going to get oil really revving revving its engines, so to speak, tomorrow. So we'll definitely be keeping an eye on that tomorrow after we get in our trade room tomorrow morning. What else do we have going on here for tomorrow? Got a bunch of big news here you can see. We get jobless claims and productivity at 8:30 tomorrow morning. I would love to say that that's going to be a big market moving event tomorrow, but I don't think it will be. I think what's going to be most important is that 10 o'clock factory orders, which you saw how that 10 o'clock news affected the markets today. We talked about this in last night's newsletter. We saw how that affected the markets today. I would expect the big market moving event, obviously, if we don't hear anything from the Fed, right? Anything from OPEC. Obviously, all things equal, I would imagine the biggest kind of market moving opportunity tomorrow will be around that 10 o'clock shock, right? So 10 o'clock, 10:05, 10:10, right into 10:30 as we go into the last half of the U.S. morning session. So if you could only be at your desk for 45 minutes tomorrow, I would definitely say 9:30, 9:30 to 11 o'clock. If you can be there for 90 minutes tomorrow, that would really be the time I would try to drill down into. Now remember, we're going to be in our trade room every morning trading this stuff together as of 8 o'clock Eastern time. So tomorrow, right, don't do this alone. I'll put all the registration links for membership for the trade room in the description of this YouTube video. If you're on the blog right now, just scroll right down. There's a big button right below the video tonight to get registered as a client of mine and come join me and trade this stuff together tomorrow morning in the trade room, opening up every morning, Monday through Friday at 8 o'clock Eastern time. So again, the key points for tomorrow is, will we hear from OPEC tomorrow? Right, your guess is as good as mine. We're going to hear at some point this week, that's for sure. Right, will we get that big, right, market moving event around 10 o'clock? That's something I'm watching for tomorrow. Right, and again, I would keep your afternoon plans tomorrow, because be careful with the afternoon session leading into Non-Farm Friday. And of course, Non-Farm Friday is a big deal, and we'll talk a lot more about that in tomorrow night's newsletter. So make sure you subscribe to our channel and come back and see me again in tomorrow night's newsletter. All right, we get the charts all ready to go here for us tonight. We get some oil, some S&P, and of course some gold. Let's break this open first on the black gold, the crude oil, the Texas tea, right? Let's take a look at oil. Now, honestly, oil is in a very familiar spot as we were last night. In fact, if you go back and watch last night's newsletter, this is kind of the same situation we found ourselves in yesterday. The day began in a range. It finished with a strong move with 2 tries for the bears. But we really haven't seen, that real strong breakout. Again, if you watch this newsletter every evening, you know what I'm looking for. I'm looking for a strong break, but they've got to hold it. They've got to hold that breakout pullback. They're not holding it right now, and that tells me we're likely now going to be running back up into that trading range. Again, this is almost a carbon copy of what we talked about in last night's newsletter. It's very similar. So what do we know about the oil right now? We know the market started off today in a range. Now, the range here is a little bit odd, right? I've got the range between this 48, 47, 60 area here. I also wouldn't argue with you if you had the range up here somewhere, right? Both of those are fine, because we're definitely anticipating a move back up into the range, retest the high, right? So the bottom line is, we know there's a range on here. It may not be as clear and cut as I'm making it look right now. You might disagree with this range. You're perfectly correct. I think everybody will be correct as long as you know there's a range towards the upper half of this trading range. Now, anytime I see a trading range, right, I know the plan is pretty simple. Buy low, sell high, and avoid the middle. And my favorite way to trade ranges is to focus on failures, right? So as we go up, we wait for buyers to try and fail, and we sell into their stops. We wait for market to go down, we look for sellers to fail, and we buy into those stops, right? We focus on failures, buying low and selling high. We also know that ranges are a balanced market. So when I have a range on this area, right? I know there's kind of like a magnet right in the middle, right? When it goes down, it'll go back into that magnet. The problem is, though, it's probably not going to stop inside that magnet. A lot of times that momentum will swing. I call this a pendulum swing, and it will swing all the way up to the other side. And that puts us as a potential target for tomorrow at $49 per barrel. So as you can see here, one objective is to get back into the range. The next objective is to retest those highs. If you have a runner on the, if you get a runner on your account tomorrow, might not be a bad idea to leave that runner into the end of that move here at 49 for tomorrow. That's the main thing right now. We get a range. What else do we know here? We also know that big, strong move down. What does that strong move tell us? Anytime I see a strong move in one direction, anytime I see a strong move higher, for example, it's almost a guarantee they're going to pull it back. Counter trend traders fail, and we retest that high. When I see a strong move down now, the odds are very high that at some point here, we get back down to these lows down here to flush out, right? To finish off that second leg. Anytime I see a strong move in one direction, I know the odds are very good. We see at the very least a retest of the extreme, at the very most a complete measured leg, right? A symmetrical move going lower. This is a really big clue in my eyes, because what this shows me is I've got to be very careful right now trying to be a buyer. Why? Because have we retested the low yet? We haven't retested the low yet. We haven't. So we know there is kind of like an elephant in the room, right? There's kind of like that black cloud hanging over the bulls right now saying, once you try to buy this, I'm going to run you out and then run it back up into that trading range. This is one of the trickiest parts of being a new trader, is you can't forget about those big moves in one direction. Sometimes you'll see a big move in one direction, right? Like, for example, the bears here right now, right? It might sit here for a while, and you might be 3 or 4 hours later, you might forget about that big move, but sure enough, though, eventually it comes back down, it completes its objective, and then once the bears get what they're looking for, then they give up and the market shoots back up into that trading range. The most important thing I want you to be aware of right now is that strong move down tells me I've got to be very careful being a buyer before we retest that low. After we retest the low, then I can start getting a lot more aggressive on this, right? Then I can start looking for some better setups, more aggressive setups to buy off of that low. That's another very important piece of this puzzle. So put these two together. I want to be a buyer down here because we're underneath the range. I know where the market wants to go, but I have to respect this strong move down. So what if we don't get the follow through? What if we do get the follow through? What if it just sits here and goes sideways for a while? Let's put this plan together. Now you know the basic fundamentals. You know where my head's at right now. You know what the pendulum swing's all about, right? So I'm going to get rid of that here just to keep things clean here for the time being. Now, as we run higher, right? And it's the exact same plan we talked about last night. As we try to run higher, what you've got to remember is there are sellers right now who have their orders just floating right there. And so once it goes higher, you're going to probably see, if not a run lower, but at least a significant attempt to run lower. Now, for your average trader using a 10, 15, 20 tick stop, you're not going to be, you have a hard time, right? I wouldn't say never, but you'll have a hard time buying high and withstanding that pullback. So what I do is I got to plan for those bears coming in. I got to plan for those sellers making my job a little more difficult up here. I anticipate, again, we're going to probably see some bears coming in up top of these highs. So what's the best way for me to protect against the bears but look for an opportunity to get long? I call it a crown reversal pattern, but I'm going to use it on a slightly more short-term reckoning scale here. As we go higher, I'm anticipating bears will try to sell. I'm anticipating bears will try to sell. What I'm looking for here is I'm looking for those bears to try twice so I can pick their pockets, right, and buy off a trap, right? Now, again, I call this a crown reversal. It's also known as a two-try trap pattern. It all depends on kind of how you use it here. But imagine, though, now, right, as we go higher, we see bears try once, higher high, bears try twice. that trap low is almost a bulletproof trade. YouTube won't let me say I can't say guaranteed anymore, right? Almost, right? A bulletproof trade. And we saw 2 examples of that from last night's newsletter, which played out fantastic in the early parts of today's trading session. So we'll call that a 2-try trap pattern, right? Trap low. You've got this great support trend line sitting down here to protect you, right, against those bears there. But remember, because the bears are so strong here right now, you've got to give them the benefit of the doubt. Now, what if we don't get those sellers coming in here? What if the market runs back up into the range here? If it runs back up into the range, stay focused, stay patient on looking for a seller failure pattern just underneath that trading range. Now, what's a seller failure look like? If you go back in time here, look back here, right? We get below the range, and see how when the bears come back to the moving average, they try to sell off the EMA? That's a failure I'm looking for right there. Those are my bread and butter, and soon to be your bread and butter, in a range-bound market, right? So range market, buy low, but again, right, if we go lower, I'm going to buy low by buying into a failure pattern. So if we run back up now into that range now, and we get comfortable back inside that range again, just wait for that price to pull back. Once it pulls back, what's going to happen is that moving average will come over. The bears will try to sell off of it like they always do, right? And you'll be waiting right there like a pro, waiting to buy right into those stop losses. A seller failure pattern as it goes higher. Now, I know what you're thinking. What if we get this type of move right back up again? What would be a way for me to capitalize on this before we get back to retest the high, before we get back to that pendulum swing? Here are 2 patterns to watch for. One of them is first one will be the most conservative, and that is a 1, 2, 3 reversal. If these buyers, if they can hold that pullback off the moving average, remember they haven't been able to do that yet, right? The buyers haven't held the pullback. That will give them momentum on their side. Then I'm going to mark up the trend line off the highs. I'm going to bring that down now, put it at that low. That creates a hidden channel, and we're buying off the low of that hidden channel. Now remember, this is all based on this 1, 2, 3 reversal. 1, strong move up. 2, pull back to the moving average. 3 is going to be that run through, right? That third leg, that number 3, that strong run up, that is going to be critical to get the momentum going. And again, we'll look to pull back here and buy the low. I call that a 1, 2, 3 reversal into a hidden channel pullback. I've got one more trick up my sleeve. What if it doesn't pull back, right? What if it just runs, right? What if it runs? If it runs and it won't pull back, right? Usually it goes up, pulls back, and goes for you, right? If it won't pull back and just runs, what you look for is a shallow pullback, a higher high. The higher high is what gives it away, and then you know you're looking for a trap just below that prior swing. Now again, remember, this is all about momentum, right? This is all about a strong move going higher. Look back here, right? Look what happened back here. Strong move down. Watch what happens. Strong move down, shallow pullback, lower low, right? That's the giveaway. Now you've got bears coming in, right, trying to sell, right, trying to sell into it, right? It's the same exact pattern. I'm just talking about the upside. So strong move up, shallow pullback, higher high in price. The higher high is what gives it away. What usually happens, though, is that first pullback won't touch the moving average, right? What that does is everybody's still waiting to get in now, right? What they do now is they want to buy high, right? They put their order right below that low. I learned this trick from one of my coaches many, many years ago. It's a great setup. Again, it won't pull back to the moving average. So bears are still waiting, and they'll hit it, right, once it comes up. Same thing over here. Now, a lot of times, you'll be able to find some, hidden channel to buy off of, right? A lot of times, you'll be able to incorporate that with that channel as well. Again, though, this is not before the range. This is once we blast right back up. Momentum is a really big part of this plan. Now, what if we don't go higher? What if this market sits and goes sideways? Well, remember, every once in a while, we heard from OPEC today, right? And what did OPEC say? OPEC said they're still trying to convince the Russians to agree to this production cut. I'm obviously paraphrasing this, right? I'm sure there was some different language they used, right? But basically, right, OPEC's about to get a meeting going on this week. They're talking about production cuts, right? Trying to get this price up above $50 a barrel again, right? They come out and they say we haven't agreed yet. And that's what's caused price to move down. There's a good chance here that what was the agreed area, right? Remember, what is a range? A range is really where the buyers and sellers agree on value, right? That's the price range. Whether you're buying a new house, you're buying a new car, you're buying groceries, right? The range of prices is where buyers and sellers can agree. Well, if something changes, like for example, an announcement from OPEC, yeah, that might move the agreed price down. So in this situation, if we start really going sideways here, right, you're almost going to see it, right? You're almost going to see there may be a range here. Now, we're not there yet, right? But if we're sitting here for a while, right, and this thing really starts to go sideways now we're going to get rid of the old range and we'll start using the new range, right? Makes sense? Now, what do we do with this market if we do get it inside of a new range down here? That will be a bear bias to it, right? A bear market to it. So what are some options here? And again, this is very much prerequisite is we have to be sitting in this range for a while overnight, right? It'll go right sideways here. What are some options? How can I buy low? I can buy low of this range by using what I call a nested failure pattern, right? A nested failure. Nested failure patterns, remember, it's a bear market at this point. A nested failure requires the bears to try a couple times. It's not as aggressive as your typical seller failure, which we talked about earlier on, right, in this lesson. We're looking for a nested failure because after all, we're buying, right, against that short-term momentum. Does that make sense? What I'll do is I'll wait for those bears to sell it once, wait for them to try twice, then we'll try to pull the string, right, and run this thing back up into that range. It's called a nested failure pattern. What else could I use here, right? If we go sideways here and we sit here for a while, can I sell high? Oh, absolutely. I can use a pattern that looks just like this one, right? I wait for the price to go up. I wait for the buyers to try to buy the pullback, right? And once we see the buyers buy the pullback, we know exactly what their stops are, right? And we're selling into those stop losses. That's a typical failure pattern. Remember, we're going with momentum at that point, right? So I can get aggressive selling into buyer stop losses with a buyer. Basically, it's a breakout pullback failure. I have to be more conservative being a buyer off the low with that nested, right? Because obviously we're going against the trend. Right? Now, don't forget, guys, we're going to trade all this stuff together tomorrow morning, and I would encourage you to come trade it with me as a client in our trade room. I'll put all the links for membership in the description of this YouTube video. And you know what? If you're not going to be with me tomorrow, if membership isn't quite right for you, what I would definitely recommend is grab my free trading course. I'll put a link in the upper right-hand corner here for you. You'll see it pop up there. Grab the free course because in the free trading course, you'll learn my 3-step strategy, the same strategy we use in our trade room. Most importantly, though, you'll see hundreds of examples of failures and nesteds and reversals. That way, at the very least, when you come back and watch last night or tomorrow night's newsletter, where I'm getting to myself, when you come back and watch tomorrow's newsletter, you'll be able to know what I'm talking about when I say nested failure or straight up failure or two-try trap pattern. So again, all the membership links are in the description of the video, but grab that free course linked up in the upper right-hand corner. So now we get a pretty good plan if it goes sideways. What do we do if it goes lower here? If it wants to go lower, where are we trying to go? They're trying to go back to fill that gap. Right? That gap is still kind of the last man standing right here. And if OPEC can't get their act together here, that 45.26 area, and keep in mind, it's not a gap to be filled anymore. This is the gap from last Friday's close to Sunday's open, right? It got filled already, but anytime I see a weekend gap, I know that weekend gap becomes a magnet until the end of the week, the next week. So how do I sell it as it's going lower? Well, obviously, I don't want to sell down here because that's going to be the objective to go back into the range now. Here are 2 patterns to watch for. One is a 1, 2, 3 breakout, right? This is the same basic pattern we always talk about. I've got to wait for a strong move through. But remember, this could easily come ripping right back up into that range, right? What would you use for it? If you wanted to buy it, what'd you use? A one try, a two try, right? You want to use a nested failure there to buy off of that low. But what if they can hold that pullback, right? What if these bears, what if they can hold that pullback? If they can hold that pullback, now what I can do is I can draw a trend line off the low. I can draw a trend line off the major high, right? I'm not going to draw it off of that high. I'm going to draw it off the major high. What that does is now that level right there, there's my sweet spot right there. Now, what I'll do is I'll stay very patient. I'll wait for the breakdown. I'll wait for the reversal. But then once we get back to the top of that channel, patience is done. It's time to hit it. It's time to use whatever tools we have to get into, right, that short. And again, my target is back down to refill, right? Or again, it already got filled, but it's a sticky point here until the end of the day on Friday. Now, what if we don't get the pullback and the run? What if it just tanks, right? What if it tanks on us? If it makes a strong run down and doesn't pull back to the moving average, right? What do? Two try trap. You got it, right? Lower lows the giveaway, trap high, right? You can see how we apply this same pattern now in a slightly different environment, right? Again, it's the same basic idea right there, right? Strong move down, shallow pullback, lower low, trap high, sell that sucker, right? Great setup. The key here, remember, is you want to get just above moving average. Usually this will be just off the high, right, of a hidden channel. That is a great setup. Hopefully we'll get it, right? Hopefully we'll get it. Only time will tell right now. And don't forget, guys, tomorrow morning, 8 o'clock Eastern time, get registered for tomorrow morning's trading session. That way, of course, we can do it together. So oil is looking good here right now. How about some S&P? Let's get some E-minis going on right now. What do we know about the S&P right now? We know we're bullish. We know we have a strong move higher. You see it? Right? Now, what does a strong move higher tell me? We just talked about this, right? What does a strong move higher tell me? It tells me you've got to think those buyers have one thing on their mind, and that is to retest the high, right? And they're going to look for ways to buy low, buy low, buy low until they get that job done, right? This is a great example of why I never try to call tops, right, in any real situation, let alone a strong bull move. So think about what happened here earlier today, and you might see something very similar here, right, for tomorrow, right? We get a strong move up, strong move, pull back, run, right? We know they got their measured move. We know it's very bullish. They're they're just about to get to that retest at that 31.67 area, right? So we know this is going to be a pretty lofty area on the chart, but we know we're bullish. In a bull market tells me what? Find levels of support, right? A bull market tells me find levels of support. How about this support level? Draw off the highs, down to that low. That's a beautiful level of support to use. How about this support level? Prior high, right? Prior high. That is a beautiful area of support. You'll notice I broke that into two sections, 1 and 2. We'll talk about that in more detail here in a moment. What else do we know right now, right? Bull market, buy at support. Strong bull move. Be very careful getting short this thing right now. Be very careful, right? They're going to keep trying to get back up to retest the high, right? And if they can keep going on this, we got that runaway zone waiting up top there at 31.65 and change before we get back to that big sticky area at 3,200. Now, we also want to keep in mind, like I mentioned earlier, look what happened back earlier this morning, right? Earlier today, strong move up, right, into a range. I wouldn't be surprised if we see something very similar here, right, in the overnight session right now. So we do want to be prepared for a possible trading range. All right, that's pretty much all we need to know about this right now. We know we're bullish. We know we've got a strong move up, right? We don't want to fight the direction on this. We know we're lofty around that measured move, which always kind of tells me look for a range, be anticipating a range up here. So we definitely want to be ready for, right, everything we get on this one. Now, let's zoom in a little bit closer here on this chart and let's play the game, right? What if it goes up? What if it goes down? What if it goes sideways, right? I know it's very basic to think like that, but that's the way the markets move, right? The markets only move in three ways: up, down, and sideways. Let's talk about the downside first, right? Because I'd love to get a pullback right down at these lows here. And really, guys, I don't need to go all the way to the low of this channel. The channel is just a visual I have in the chart right now. We don't need to go all the way to that low. I would really like to get down to at least 92 3/4, right? Or 92 half, right? Whatever that number is right there, right? It's 92 1/4, right? 92, what is that high? What's that close at? Yeah, 92 and a quarter, right? So 92 and a quarter, that's going to be where I really want to get down to. Now, how we get there is really the question right now, right? Do we go 1, 2, and pull back? Now, in that case, that's called a two-legged pullback. I'll draw the trend line down, and I'll try to use that trend line on the opposite side, right, for a buy. Okay, I call these two-legged pullbacks, or 2LP for short, right? Two-legged pullback. Or we may just simply see a pullback. The sellers may come in off the moving average. They may fail, right? Once those bears try to sell off the EMA, and we can buy right into those stop losses. You know, and again, this pattern, you can see an example back here, right? We get under the range, we pull back, the bears try to sell off the EMA, and what happens when they get stopped out, right? They run right back up to retest the high. That is the exact same idea we're looking for over here. And again, we have the luxury tonight of being able to look at what happened at the beginning of today's session and probably going to see something similar to that here for tomorrow, right? Markets are filled with people, and people are creatures of habit, right? I eat the same thing for breakfast. I do the same thing pretty much every day, right? Human beings love routine. They'll probably try to emulate that same setup, right, for tomorrow morning as well. Now, I mentioned earlier that I've got two buy zones, right? I've got one zone here and then one zone a little bit lower, right, a little bit lower down here. Why do I do it that way? I do it to kind of give you a tip off on this, on what pattern to use. For example, if I get down to the buy zone 1, what I'll do is I'll look for, again, either a two-legged pullback or I'll look for a straight up seller failure into pullback combination. Okay, these are very, very common, right? Seller failure pattern, pretty easy, right, into a pullback pattern as we go. Now, sometimes we don't get the pullback pattern, right? Sometimes the market, what it does is it just shoots higher, right? Doesn't come back. You know, we saw an example back there, right? That pullback, not very easy to take that pullback, right? Didn't pull back for you. So we may not get the pullback, but you always want to keep an eye on it for me, right? So be aware of that. Again, seller failure. The bears come down. They try to sell off the moving average. We're buying their stops, right? And we're buying the pullback. Back up to where? Back up to retest the high, right? There's no range in this scenario, right? It's just kind of a cautionary rectangle there. Now, what if we go deeper, right? What if we go down to the deeper buy zone, right? Because different buy zones might give me what? Different momentum. And momentum tells me the type of entry pattern I want to be using. Let's say, for example, now we really push lower, right? Down into the low of that channel, down into that, right, that secondary zone. Now what's going to happen? Well, the moving average comes over, but now the bears, what's going to happen? That's a real strong move. And what do we always expect off a real strong move? We expect to see another leg, right? So what I'll do is I'm going to give the sellers the benefit of the doubt on this. If we really pull back strong here, now I'm going to use my favorite pattern to absorb momentum while at the same time waiting for my chance to buy right into those stops of those sellers. What was this pattern called again? It's called a nested pattern. 1 try for the bears, 2 try for the bears. And really the idea is pretty simple. With a very strong move down, those sellers are probably not going to give up without a fight, right? They'll try once, they'll try twice. Once I've got those bears trying twice now I know where their stops are and I can buy right into those stop losses. Another entry you'll see me use in the trade room, right, is this trap low on this, right? That's even better, right? Because now it's got that trap at the bottom. Now you've got bears trying twice. Now you're buying as low as you can. That's a beautiful setup as well. That's called a crown reversal, right? The way it sets up, right? If you flip it around, it's basically a 2-try trap pattern. The reality though is those are 2 setups I'm watching for when we get those really deep pullbacks. Now, I know what you're thinking. Well, if it moves that far down, at what point does it become a bear market? Once they hold that pullback, right? If they hold that pullback and run, good. I'm bearish now. I'm not going to try to predict that breakout pullback, right? I'm not going to try to predict that reversal. That's a rookie's mistake, right? I made that mistake, over 10 years ago. I've learned my lesson that letting that little voice in my head convince me this market's going to dump. What I'll do is I'll wait for that break off the moving average, then I'll plan my entry. Mark my trend line, find that hidden channel. Remember, I'm drawing the hidden channel a bit wider here. I'm going to mark up that low, and that's my sweet spot now. Again, these are types of setups you're going to have to stay patient for, right? You're not going to get short, right, as it's collapsing, not if you want to be consistently profitable. Yeah, sometimes they'll keep going. You know, sometimes you can chase these pullbacks in a bull market. Remember, the key here is it's not a bear market. It's a bull market. So a pullback, no matter how deep it is, until they can hold that pullback, this thing is still bullish. Once they hold the pullback, though, then it's on. Then we know momentum shifted, and we can sell off the top of that channel. Now, what if we don't get the pullback, right? What if it just collapses here? If it collapses, well, look what happened back here, right? Strong move up, shallow pullback, higher high, what? Trap, right? See that pattern right there? You see these patterns all over the place. So if it doesn't pull back for us, if it doesn't hold and go, right? If it just dumps, you know what I mean? Right? Just collapses. Shallow pullback, lower low. And again, this will usually be it will just barely miss the moving average. That's usually the classic case for it. Trap high, right, for the short as we go back down. What happens is if momentum is that strong, and again, I probably should even more stronger, right? But you get the point, right? If it just collapses down, right, you're going through the buy zones here. It's not pulling back. Everyone's waiting for that next trap. And again, those traps, they'll usually come right off the high, right, of like some hidden channel up there. So keep your eyes open, right? Keep your eyes open on that. Okay, those are two patterns to look for after we get the reversal. So boy, we have dissected the pullback here pretty darn well at this point. How am I doing so far? You enjoying the video? Hit that thumbs up button for me, will ya? I always appreciate you guys. Give me some feedback. If you're loving the video right now, subscribe to the channel, hit that thumbs up button. And don't forget, if you have any questions, right, type those questions in the comment section below. I'll be getting those answered after I finish publishing the video tonight. How about the range up here? Right? What if it goes sideways? Now, again, we saw earlier, this is kind of a tip-off, right? And it almost looks like they're trying to make their way that range right now. Time will tell. What if the market sits here quietly in the overnight? What do we do? I'm still going to watch these levels of support down here, absolutely. But most importantly, though, once we have a trading range, I'm going to add on what I call range expansions. What I'll do is, just to kind of give you a little bit of a glimpse into that, once I know the size of my range, then I'll take the size of the range, or copy and paste it down, right? And that's going to give me now, just again, this is a very raw sketch right now, right? Once I know the exact range, I'll be able to update this for our clients tomorrow morning. But once we have our range going sideways, now I know there's my buy zone now, right? Now what we do is we wait for the buyers to run out of bullets. We wait for that pullback, right? At this point now, what's going to happen? A lot of the bears in the market, they're going to see this stalling out, and they're going to think this move down is a reversal. It's not. Don't short it, right? Don't short it. Yeah, I know. Sometimes it will hold and keep going. But the majority of the time, though, it will pull back to the moving average. You'll see bears try to short off the EMA, and it will run right back up into that trading range. That's going to be my go-to here if we go sideways, buying underneath that range. Now, if we go sideways, how do we buy a breakout? What's a breakout look like? Breakouts are going to be the 1, 2, 3 breakout, right? Remember, they got to hold that pullback, right, and break out. Then what do? We mark up the high, we mark up the low. Remember this earlier? It's called a 1, 2, 3 breakout into a hidden channel pullback, right? I do not trade breakouts, right? Breakouts are not trustworthy. But if I can get that breakout to hold that first pullback, I can buy the next pullback. It's a lot more reliable is the word I would use. Now, what if we blast through? Right? What if we don't go up and pull back and go? Right? What if this thing just blasts right through? What if it rips higher here? Well, first things first, you got to know where you're trying to go. Right? Trying to get back to that runaway zone, right? Really what I would assume is they're trying to get up to that 3,200. Right? 3,200 is going to be a big magnet, it's a big range from earlier on in the year there. So 3,200 is probably going to be where they're trying to go. But I always say just watch the runaway zone, right? Anytime I see these big, strong moves like this, right? This big move at the beginning of the day today is what gives me that runaway zone. That runaway zone, if we get this thing ripping higher here, right? No pullback, strong move up, shallow pullback, higher high. Again, this will usually be just above the moving average, then just below the moving average. What do we call it again? A 2-try trap. You got it. You got it. See, now you're talking, right? 2-try trap off the low of a much more aggressive, right, hidden channel. right? Remember, when the market gets aggressive, you're not going to get that deep pullback. It's going to be a shallow pullback because what happens? Whenever you see a real strong move, what happens? The buyers are itching to get back, right, to retest those highs. Those are my two favorite breakout patterns, right, as we go. And don't be surprised if we see one more of these runs and then into the range up here, right? So don't be surprised if we get up there, see into the range, one try, two try, failure pattern to buy underneath that low. Now we're talking, right? Now we're talking. And again, we've talked about the reversal, right? What's the reversal look like? The reversal will be a strong move down, pull back, and go, right? Yeah, we talked about that already. Awesome. So now we've got the upside, the downside, the sideways side. I think we're ready to rock and roll here, guys. Make sure you type those questions in. And again, right, don't do this on your own every morning. It's so much more difficult to learn on your own. Come out and trade it with me tomorrow, 8 o'clock Eastern time. All the links to get registered are in the description of the YouTube video. Or if you're on the blog right now, there's a big blue button for you right below the video tonight on the blog. Or again, right, if membership isn't right for you, grab that free course, right? I keep mentioning linked up in the upper right-hand corner. Let's wrap this session up now with the gold, the yellow metal here. What do we got going on here on the gold? What do we know about gold right now? We know we're bullish. That is pretty clear, right? We're bullish technically, fundamentally, right? I say fundamentally because, the first thing I went to a dinner party over the weekend last weekend, and the first thing the guy said across from me at the dinner party was, "So where do you think gold's going?" And I said, well, obviously there's a lot. That's a very loaded question, right? Gold is not the same market it used to be with Bitcoin now, right? Obviously, we'll go into that in more detail in another video. But the reality is, Bitcoin is fundamentally, people are very curious, right, about gold right now, about price going higher. So that's why I say it's technically bullish, right? Because you've obviously got that big bull run up, but you've got guys like, Jim Rogers, right, saying buy gold. I mean, given he's been saying buy gold for 40 years now, right? Jim Rogers, by the way, don't let him scare you. He's been scaring people since he was born, I think, right? Ever since I became a trader, he's been telling me buy gold, the world's coming to an end. But there's a lot of people right now that are talking about buying gold for obvious reasons. That fundamental catalyst along with the technicals are here in play as well. What else do we know right now? We know we're range bound, right? We're range bound here right now, right? Bull market up, chopping around inside the range. What does that tell me? A range tells me to buy low, sell high, and avoid the middle, right? I want to buy low, I want to sell high, and of course, avoid the middle. Now, because we are so bullish, I can be relatively aggressive buying off the low. But because we're so bullish, I'm going to be more patient, right? Nested failure, for example, to sell off that high. You see where I'm going with this, right? I can gladly buy into seller's stop losses down inside my buy zone, right? Seller failure, bull pullback on the way back into the range. But if I go higher here, I can't do that, right? I've got to look for the 1, the 2, and then I can sell it from there, right? Because what happens is when you're bullish and you're trying to sell off that high, the buyer's going to fight that, right? The buyers will fight this, right? Look like back here, right? Strong move up. It rarely will collapse back down, right? You see once, twice, and then they let it go, right? They're not going to let it go that fast, right? That easily. We go up, 1, 2, and then it goes back down, right? So if we want to sell it, we got to wait for the right entry setup. So I want to be a buyer. I want to buy underneath the range. If I want to be a seller, I'm going to sell up above the top of the range. Now, what I really like about this chart right now is I got a bunch of really good confluence levels. For example, one thing I see is the range is really narrow. Anytime I have a narrow range, I always perk up to this secondary battle zone, the secondary buy zone, right? Remember I said earlier, right? I'll take the size of that range and I'll copy and paste it down. Well, you'll notice I've gone one more layer more. Why do I do that? It's all about risk-reward ratio, right? The reason I say that is because a narrow range, I have to get a big move out of the range in order for me to be able to risk small to earn large. Does that make sense, right? If the range is really narrow, I have to get outside the range by a good margin to get a good risk-reward ratio. If this range, for example, was really wide, right? A wider range, I can easily pick tops and bottoms, right? I can easily buy around the edges because I can easily take a small risk and a big reward, right? I can't do that, though, in these types of ranges. Make sense? So I really start to gravitate towards these, again, kind of the double, or you could even say triple, right, range expansion, however you count them. So that's a very, very important area for me. It's also right below that low, not from today, but yesterday's low. I would imagine you have a lot of buyers waiting just below that low right now. They're just drooling over the chance to load the boat back up again. On top of that, I've got this trend line coming down. It lines up so nicely off those two lows from today. That is a beautiful, again, kind of confluence area there. And then there's one more, right? The trend line right there. That area kind of caps off now, right? This whole kind of battle zone on steroids, if you will, right? This is kind of the juiced up area there for those buyers. Now, as you can imagine, how the market pulls back is going to be a big part of this. So, for example, what we may see is keep your eyes on 27.2. We may see it come down, right? Just kind of a little trap low, and we may see this thing run right back up into that range, right? Bears come in, and we're buying right into those stop losses to buy back up in. At the same time, though, we may not get that signal. It may go hunting for that deeper pullback because of the reasons we talked about earlier. If it really runs, right, it really digs lower here into that trend line down there, now we've got to be very careful because now this market's going to feel very bearish. And even though we're still bullish overall, we got to be careful now because what's going to happen? The bears are going to try to fight their way back to retest that low. Let them try it once. Let them try twice. There you go. Once we have them digging their own grave, so to speak, then we can, of course, buy into those stops. Now, a lot of times, these deep pullbacks, when they fail, they just snap right back higher. So you got to make sure you get your orders ready right underneath those highs. And then don't forget, a lot of times, these will snap higher into the two-try trap, right? So keep your eyes open on that. I hope we get that. It's a little bit more of a patience game in that point because you got to wait for two tries. But I'll tell you right now, if we can get that deep pullback, right? Bears try once, bears try twice. We know where stops are, right? And then look for that, right? The little two-try trap pattern as this thing snaps back up here. And again, usually you'll notice there's going to be some sort of, right, kind of hidden channel, right, to combine off of that low. Now, again, I'm just simply marking up some ideas right now. Tomorrow we'll trade it together, right? Do with me, or check out that free trading course I mentioned earlier. All the links are right below the video tonight in the description or on the blog. Now, what if we go sideways here? If we go sideways here right now, not a lot changes, right? So if this thing continues to kind of cook sideways here, not a lot changes. Want to avoid the middle, right? So sitting on hands here, what did I do? Come on. Let me back in here. Let me back in. There we go. Sorry about that. Right? If we're sitting on hands, and this is going sideways here, right? If we're sitting on hands here right now, okay, waiting, wait for the failure, back up, wait for the nested, back up, right? Okay, what if it goes higher? Can I sell off the high? I can, but I got to use what? The nested again. I realize the same pattern, but you're going against momentum right now, right? So 1, 2, and then short that sucker right into those stops, right? How does it break out? What's a breakout look like? A breakout. 1, 2, 3 breakout, right? Strong move up, pull back to the moving average holds, mark up the high, mark up the hidden channel, hit that sucker, right? Buy that pullback off the low of that channel. Look for those, right, confluence areas there. Great setup as we go higher. Where would these buyers be trying to go? They're trying to go up. Where is it? There you go, 91.9, basically the yearly highs, right? It's basically yearly highs, which again, we're only in March, right? But, still, it is the highest point of 2020 right now is trying to go. If it doesn't pull back, if it doesn't, it rips higher. What's the pattern? Shallow pullback, higher high. Good. I'm glad to see you're paying attention. Good to have you with me here tonight. That's exactly why we do this, right? Repetition. Repetition is what breeds success, especially in day trading, right? We've all heard those stories of traders who have this instinct, right? It's like they can smell the next setup. How do you develop instincts? By consistent practice over and over and over again. Because once you see enough of these strong breakouts, that brain, that impressive brain of ours, right? Well, maybe not all of us. I'm kidding with you. I'm kidding with you. Mine definitely might not qualify. But most people, right? Impressive brain. Once we see that strong break up, most experienced traders now, they're already thinking, where's the hidden channel, right? Where's my trap low? Where can I get off it, right? It's not instinct. It's just when we see certain things happen, we've practiced it so many times that we know what's most likely and we know to wait for that. We don't let those big jumps, right, get us a chase into those trades. All right. We've covered a lot here tonight on the video. Hope you learned a lot tonight on the newsletter. Don't forget tomorrow morning, the best and easiest way to kickstart your trading career, or the best way to get your career back on track, is to come out and join me every morning, 8 o'clock Eastern time, as a new advanced member. All the information, again, as I mentioned earlier, if you're on YouTube, check the description. If you're on the blog right now, scroll right below me tonight on the trading blog. Get registered for tomorrow morning's trading session. If I don't see you tomorrow morning at the opening bell in the trade room, come back and see us again soon. We'll come back tomorrow night for, as always, the next edition of this nightly newsletter. Don't be afraid. Don't be afraid to call that toll-free phone number. Use that live support. And as always, if membership isn't quite right for you, definitely take the free trial. The free trial includes the free trading course, a free pass to our trade room, hundreds of examples of how we apply our favorite trading strategies to our favorite markets, right? If you're brand new to trading, you owe it to yourself to lay that foundation nice and strong. So grab the free course, become a member, and I'll see you guys tomorrow morning at the opening bell, or, right, we'll see you tomorrow night on the next edition of this nightly newsletter. As always, guys, my name is Joseph. Be well out there. Be nice to each other. Be safe out there if you're dealing with this coronavirus right now. And we'll see you guys same time, same place tomorrow. Adios, amigos. Bye-bye for now.